Today, let's briefly and to the point go over one of the most popular and my favorite indicators, the RSI, or Relative Strength Index. What is it? How can you use it to its fullest potential? My name is Yuri Ovcharov. You're on the CryptoSlon channel. Let's not drag out the introduction. Let's get started. So what exactly is the RSI? RSI is an index of movement strength that ranges from 0 to 100 and shows whether the market is overheated or, on the contrary, undervalued. And I'll say right away that I don't use it for scalping or intraday trading. In fact, I don't believe in such speculative intraday trading at all. I made a documentary about why I'm so skeptical about this. You can watch it by following the link right here. But you can decide for yourself how to use it. If you want, trade with it. If you want, use it as an investor for analysis and forecasting in the short and medium term. The rules are the same, they will work. The only difference is that on lower timeframes, they will work but give more false signals. On higher timeframes, they will perform with greater accuracy. So here we have the Bitcoin chart. Let's immediately add the indicators we need. Right here in the Indicators tab, we type in RSI. Here it is, the Relative Strength Index. And we will also need a volume indicator. Now let's move on to selecting the time frame. In my opinion, it works best on larger time frames. That's 1 week, 1 day, or you can use the 4-hour time frame, but I personally like the 4-hour time frame less. I prefer how it performs on larger time frames. And let me immediately mention another important point. The RSI works well on highly capitalized assets, such as major stocks of large companies or Bitcoin and Ethereum, strong coins. However, it will perform worse on less liquid assets with low capitalization and low trading volume, just like any other indicator, really. So now let's figure out how to use the RSI. As I mentioned before, we have two values. Above 70 means the market is overheated and the asset is unjustifiably expensive. And below 30 indicates that the market is scared and the asset is priced lower than it actually should be. But as you can see, the market doesn't reverse immediately, and that's why we need clearer signals. And one of these signals is, for example, divergence. So what is divergence? Let's break it down in practice. For example, the price of an asset is rising, but the relative strength index itself is not increasing. In other words, the highs of the relative strength index are not being updated. This is called bearish divergence, after which the market corrects itself. And conversely, bullish divergence is when the price is making new lows, but the relative strength index is not making new lows. This strategy works especially well when reacting to a key significant level. Of course, it works best when used together. When the price reaches, for example, a significant zone, and this is also accompanied by divergence, plus the relative strength index itself is below 30 or above 70. In that case, of course, the probability of a reversal increases significantly. Pay attention to another important range. This is the range between 45 and 55. This is the middle range of the relative strength index. When the market is rising, that is, when there is an uptrend and the relative strength index on the weekly time frame enters this range, it is usually a good range to accumulate more of the asset, to buy more, and the growth is likely to continue. On the other hand, when the asset is in a downtrend and the relative strength index returns to this range from below, this is on the contrary a reason to sell the asset or take a short position, because the trend may continue and the decline may persist. And this signal may indicate a local rebound. So friends, you've probably noticed that the relative strength index has two lines. And this yellow line here is the moving average line of the RSI itself. And when the relative strength index, a key technical indicator, decisively crosses this significant yellow line from below, that's specifically called a golden cross, a very strong and reliable signal for potential market growth and upward momentum. But on the contrary, when the relative strength index crosses this yellow line from above, that's called a death cross, which confirms that a decline is likely. This works especially well after a divergence. For example, here we see a key level. The price has reached it, and it did so through a divergence. That is, while the price was making new lows, the RSI was not making new lows. After that, we see a golden cross and a powerful upward surge of almost 31% in just 1 month. You can also play around with time frames. For example, you are looking for a long entry point in an uptrend to continue the movement. You see the price enter the range from 45 to 55, which means it's time to buy. But how do you avoid making a mistake in this situation? To do this, switch to a lower time frame, such as 1 day, and look for divergences there. When you see that the price is making new lows, but the relative strength index itself is no longer making new lows, it means you can look for an entry point and a reversal is likely. Now let's talk about the indicator settings. How can you make everything work for you just like it does for me? In general, I use the default settings. You can view them here. So you hover over the indicator, click on settings, and you'll see them here. RSI length is 14 and moving average length is also 14. We also have a simple moving average, SMA. That's it, I haven't changed anything. Yours should be the same. But if yours is different for some reason, you can always change it and click OK. More experienced investors can adjust these settings and try to find the best smoothing for this yellow line or the RSI itself so that it works better for a specific asset or a specific time frame. This is mostly relevant for traders, of course, but I don't really do that myself. And if you like this format, I share even more insights on my Telegram channel. On Telegram, I write posts and share my thoughts in real time, make forecasts, and discuss possible scenarios. We discuss news as it happens right now. That's why there are a lot of insights on Telegram, and I publish everything there much more quickly. And we also chat in Telegram in a group that's linked to the channel. In the comments, you can chat and discuss the market situation, share your own thoughts. So if you're interested, the link is in the description. Subscribe. Now let's continue and talk about common mistakes beginners make. And the most common mistake beginners make is buying when it's below 30 and selling when it's above 70. For example, in February 2024, we saw that the RSI reached a value of 83 points, which meant the price was supposed to reverse and fall. But what actually happened was that Bitcoin rose by almost 70% before it finally started to decline. The thing is, the relative strength index can stay in this range for some time before the price actually reverses. That's why it's best to wait for a divergence, as well as for golden or death crosses before a reversal, rather than exiting a position prematurely or opening a short position too early, for example, from this point. So always take the market context into account and don't just blindly rely on the RSI. This means looking at divergences, candlesticks, volumes, and of course key levels and trend lines, which you should also pay attention to before opening a position. And another mistake is trading without considering the higher time frame. For example, here in January 2025, we could have seen a divergence like this and decided that the price would reverse and continue to rise, so we open a long position. But at the same time, we didn't take the higher time frame into account. And on the weekly time frame, we already have a bearish divergence plus a death cross on top of that. So it turns out that the uptrend is breaking, and by opening a long position here, we would already be trading against the trend, which is, of course, a mistake. Well, let's sum things up. Despite its general fame and popularity, the RSI is a powerful tool if you use it wisely. It provides excellent entry points, especially if you use it in combination with divergence, golden and death crosses, volumes, key levels, and higher time frames. Now you know how to use the RSI to its fullest and avoid common beginner mistakes. Give this video a like if you enjoyed it and want more breakdowns like this on indicators and strategies. And write in the comments which indicator you'd like me to break down next. Bollinger Bands, MACD, or maybe Bill Williams' awesome oscillator? Let me know and we'll cover it in the next video. And of course, subscribe if you're still watching my videos without being subscribed. That's all from me for now. See you in the next videos. And of course, wishing everyone profits.